Welcome to our weekly Forex Forecast. My name is Jay Norris. I teach trading at Trading University. As always, we need to remind you that trading involves risk of loss and is not suitable for all investors. Before we get started, I want to point out something that Warren Buffett said, very similar, if not identical, to our approach in the markets. We're not here anticipating anything different occurring. In fact, we're here to take advantage of what's happening in the markets right now. First market we're going to take a look at is the Australian US dollar. Aussie US dollar pretty weak. You had a pretty good sell-off this week in the US dollar off those retail sales numbers. We did the midweek forecast to bring you guys up to date on this. Aussie, however, did not participate in that dollar weakness. You did not see much of a rally at all in the Australian dollar. In fact, when we bring up our RTT ratio, you can see here the only pattern that's up in the Aussie is the 5-day, so the very short term is up. Majority of patterns down. In other words, we're still taking sell signals, otherwise selling rallies in the Aussie. You definitely want to maintain your long-term positions there. As we said last week, what's behind the fall in the Australian currency? 3 words: lower commodity prices. Let's take a look at those. We'll pan out to a monthly chart in the Aussie. You see the big picture. You can see our downside target just below 80 even. Now let's look at some of the influential commodity markets that we feel are going to continue to weaken, and that's going to put pressure on the Aussie. First one we'll take a look at will be the copper market, industrial metal. There it is. You take a look at that and you might think, well, copper's finding support at $3. Shorter term, yes, that's true, but when you look at the big picture and you see where copper came from earlier in the previous decade, and you look at the historic pricing of this market just 10 years back, you can see, well, there's a lot of room down below. You can also see when we start to scroll back down on a weekly chart, you see the momentum pointed down. So we think continued lower prices for copper. Here we'll cover another commodity very quickly that Australia is known for their production of, the wheat market. There's a monthly chart of wheat, and you can see you're in a pretty good bear market from 2012 on. So you're in a 3-year bull market. So even if you're optimistic about a potential turnaround in commodities, you'd have to admit that, yeah, that still could be a couple of years out. So we think that's going to mean lower prices for our good friend the Australian dollar. Here you see on the monthly chart, you still have momentum down. So there's your daily chart. We think a very small recovery rally. That wouldn't even qualify as a dead cat bounce in our book. So we look for continued weakness in the Australian dollar going forward. Dollar Swiss, next market. The dollar Swiss, it held support okay. It's kind of telling, however, that when you look at Friday's price action, the market started to rebound there, started to track back higher. You can see some downside targets here. You see the kind of the dark area between these two zones, kind of the overlap. Had you continued lower Thursday into Friday, we thought that that'd be a pretty good downside target, downside buy zone in there where the two zones overlap between 91.35 and 92 even or so. However, the market did not follow through Thursday and Friday, and we think this points to the possibility of more of a sideways correction for this market than a more violent, volatile downside correction here. You pan out to a historic chart, a monthly chart, to give you scale, and we think that par is going to be in the cards for this market. Now, certainly back down to a daily chart, you are in a corrective phase. Hardest thing to do in trading is predict first when a correction is going to occur, although we do feel we're past the beginning of a correction, but how far it's going to go, how long it's going to last, that's a tricky question, and we're not going to get into that. But we do think that strength in the dollar strength later in this week, following that major sell-off on Wednesday, probably points to more of a sideways correction for this market. Next market, the euro US dollar. Similar, pretty weak rally. I mean, it was a tremendous move on Wednesday, big move, but you got no follow through. Let me go back to our RTT ratio for the euro, and here's what I noticed: you couldn't crack that 25-day pattern. The 25-day pattern, that's a good sized pattern. That's a month that's pretty much a month of data you're looking at. So that 25-day remained down. 25-day remained below that orange line. You couldn't get a close above it. You really need to see successive closes above it. So the 25-day pattern remains down. We're calling for continued euro weakness. Again, what Warren Buffett said, our approach is very much profiting from lack of change rather than from change. So we think we'll see a continuation of that. And back to the correct guessing whether we're in a correction, guessing whether you're going to see a counter trend rally here. We think, again, the lack of follow through on Thursday and Friday points to more of a sideways correction here than a bona fide rally. Next market, gold. Again, we covered commodities a little bit when we covered the Aussie, and we don't see this as a particularly big rally, particularly given the boost you had from that weaker dollar this week from those bad U.S. numbers on the retail side. If you're a gold bug, you got to think that gold should have given you more of a boost there than it did. On the other hand, we wouldn't mind seeing it get a little bit higher because you can see you have a nice sell zone in there. Again, we'd look for that overlap between that zone. You can never rule out it running beyond a zone as long as it doesn't close beyond that zone, similar to what we had here in the summer. So there's a nice little zone in place. We think longer term, here's the bigger picture in gold, pan out to a weekly, that this will just prove to be another lower high in a succession of lower highs. And we think long term, when you pan out to the really long term picture, the monthly that 1200 level gives, there's a lot of room below. Similar to copper, similar to the Aussie too. So nothing's really changed for us in the gold picture there. We think that selling rallies is the way to go, and it's going to continue to be the way to go. Hey, speaking of commodities, let's take a look at crude oil. That's a market, that's a nice sell-off we saw that was preceded by that dollar strength, and the dollar strength really did a great job of predicting crude oil weakness. Look at that big sell-off. You came from $100 at the beginning of August to $80. So big slash in oil prices, and we don't think you're going to get that back anytime soon. Here's a monthly chart. We think, if anything, you'll continue to see lower prices, and even if you don't, gas prices have dropped sharply here for us in the U.S., in the Midwest. Yeah, gas prices are down at least 50 cents. So we don't see that turning around. If anything, we think you'll continue to see weaker crude oil prices. At any rate, you'll continue to have lower gas prices here in the U.S., and that's going to continue to help fuel the U.S. economy, and we think you'll have a pretty good retail season coming up into Christmas, which, of course, that'd be supportive of a continued stronger dollar. The last Forex market we'll cover will be the dollar-yen. Well, there's the monthly picture. Pretty strong market still. Here, let me get back to something a little more manageable. Daily picture, there you see a zone. You tagged it, you found support. That really wouldn't qualify as a buy signal for us. We'd like to see more of a formation, some kind of a double bottom. Well, we want to see it test support a couple of times before we buy into that. But we think it's telling that the market did find support. That's right at your 50% retracement. You take this entire move up, and bam, you just tag the 50%. The top of that zone is going to be that 50% level. So it found support on there. We see that as a healthy thing, and we would look for a potential double bottom in that same area of the chart that it bottomed out on again, and a retest of 110. Last market we're going to cover today, this is a fascinating market too. This is the U.S. bond market, and I'm going to tell you why this is so influential. Let me a weekly chart here. This is the U.S. bond market. When bonds go up, interest rates in the U.S. are going down. This is the 30-year bond market, so this is basically your mortgage rate in the U.S., so it's a very influential market. As prices go up, interest rates go down, so anyone who locked in a mortgage rate in October, they got a pretty good low rate. Remember, as prices go up, interest rates go down. So if you locked in your mortgage rates, when the bonds are up above 145, that's a good deal. That's a pretty cheap interest rate for you. We see this big move this week. Look at that huge move up in the bond market. We see that as a climax, and you have climaxes in markets prior to shifts in the market, so we think you're going to see a shift lower. Now here's what's fascinating about this market. Let's bring in the dollar index too, so we can compare them head to head here. Bond market on the right, dollar index on the left, daily chart here. Here's what I want to show you. These markets are going to move in opposite directions generally. You could see when the bond market fell off sharply here, look what happened in the dollar index. It shot up. Look at your biggest up day in the dollar index. That preceded a very sharp down move in the bonds, right? So when bonds are going down, that supports the rally in the dollar index. When bonds go up, however, that tends to put the brakes on a rally in the dollar. And you can see what happened on Wednesday. The bond market went through the roof, and you had a pretty serious correction in the dollar index, right? Now, what happens, however, if this move is a climax? You can see here in that big orange box, that's a sell zone for us. I'll back out to a weekly chart on both charts here. What do you think will happen if the bond market does climax and reverse lower? Well, that's going to be supportive of continued higher dollar prices. So we think that the dollar strength here, and I'm gonna pan out to monthly charts right now. There's your monthly bond chart on the right. Now, if that market does top out and you see a reversal, and this proves to be the first lower high in a new bear market, and i.e. higher interest rates in the United States, what do you think the dollar is going to do? Higher rates mean a stronger currency. So if this proves to be the first lower high in a new bear market for U.S. bonds, then that's going to be very bullish for the dollar index. And that's why we're calling for a big dollar rally here. We put that dollar rally in perspective. People are saying, oh, the dollar's gone too far, too fast. But if you look at historically where it's been, it wasn't that long ago where the dollar was trading at 115. Now it's at 85. A lot of room up above still in the dollar index. A lot of room down below for the U.S. bond market. So we think higher interest rates are just ahead for the United States. We take the Fed at their word that we're going to see higher rates in 2015. All this means fascinating stuff for us as traders. We'll leave you with that thought. Warren Buffett said it best. We couldn't agree with him more. My name is Jay Norris. I teach trading at Trading University. Thank you so much, and we'll see you next time.